Welcome to The Explainer. Today, we're taking a magnifying glass to a seriously dense but honestly incredibly significant financial document, Evercore's Q2 2026 earnings report. Now, if you track the financial sector, you already know Evercore is an absolute titan in global independent investment banking advisory. But this latest report, it's something else entirely. We're going to break down the anatomy of what they are officially calling a record-breaking quarter. We'll look at exactly how they pulled it off, who they're hiring to keep the momentum going, and of course, what it all means for the shareholders.
Okay, let's jump right into this massive headline number one, $1 billion. Evercore hit a flat-out massive $1.0 billion in net revenues for the second quarter of 2026 alone. Hitting $1 billion in a single quarter? That is a monumental threshold for an independent advisory firm. It's exactly the kind of figure that makes the entire industry just stop and take notes.
And you know, the firm's leadership absolutely gets the weight of this milestone. As founder and senior chairman Roger C. Altman points out here, this staggering achievement didn't just happen in a vacuum. It capped off literally the strongest first half in the firm's entire history. That kind of performance establishes some immense momentum heading into the back half of the year.
To really understand how they got here, here is our roadmap. We're looking at a quarter of record revenues, the drivers behind that growth, strategic deals, their investments in top talent, and finally, returning capital to shareholders.
Starting off with Section 1, Record Revenues, a look at Q2 2026 performance.
So, looking at these condensed financial results, and I know it's a wall of numbers, but let's bypass that and just focus on the top lines. This verifies that $1 billion quarterly figure, sure, but look to the right. A massive $2.4 billion in net revenues for the first half of 2026. This wasn't just a lucky 3 months. We're looking at sustained elite-level performance across half a year.
Before we get too deep into the weeds, we got to talk about how they report these numbers. Evercore uses both US GAAP, your standard accounting practice, and adjusted metrics. They use those adjusted metrics to strip out specific non-operational things like the transition costs from their Robey Warshaw acquisition, just to give us a cleaner look at true operating performance. But here's the kicker. Whether you look at standard GAAP or the adjusted figures, their revenue jumped by exactly 19% on both bases. The growth is absolutely undeniable, no matter which lens you use.
Moving to Section 2, Growth Drivers, Fueling the Explosion. Check out this year-over-year jump. We've got a 19% baseline increase in total Q2 net revenues from 2025 to 2026. And look, when you're operating in the high hundreds of millions, a 19% leap, that requires a massive influx of closed business. This wasn't carried by one lucky team. This broad-based strength popped up across almost every single business unit.
But while overall revenue grew 19%, here is the absolute jaw-dropper, a 201% explosion in underwriting fees. I mean, they skyrocketed from $32.2 million in Q2 of 25 all the way up to $97.1 million in Q2 of 26. What does this tell us? It means Evercore isn't just sitting back advising on mergers anymore. They are aggressively expanding their footprint in underwriting capital raises, effectively getting themselves a seat at the table in way more transactions.
That brings us to Section 3, Strategic Deals and Complex Transactions.
On the strategic advisory side, Evercore had their hands in several highly complex multi-billion-dollar deals. We're talking big wins, here like Arcosa's massive $8.5 billion sale to CRH and Iridium Communications' $8.0 billion sale to Rocket Lab. They were also right in the thick of National Grid's $1.75 billion investment, plus they successfully advised Victoria's Secret during their proxy fight. Talk about versatility, right? They're seamlessly handling everything from mega mergers all the way to intricate corporate governance battles.
Switching gears to underwriting, they grabbed the prime seat as active bookrunner for Parabilis Medicine's $771 million IPO. And the main takeaway here? This wasn't just a standard IPO. It was actually the largest biotechnology IPO of all time. Period. They also served as the lead left bookrunner on Red Cat's $259 million follow-on offering. They are consistently landing those primary seats on absolute landmark deals. And just to cement their dominance outside of individual deals, their private funds group officially took the #1 spot in Private Equity International's 2025 Placement Agent ranking. So across advisory, underwriting, and private funds, the entire machine is firing on all cylinders. Let's look at Section 4, Investing in Talent and Expanding Human Capital.
You know the old saying in investment banking, your inventory goes down the elevator every night. Human capital is literally everything. And that's exactly why this number, 188, is so crucial. That's the 188 senior managing directors, or SMDs, currently driving Evercore's investment banking franchise. These are the rainmakers, the elite professionals holding the key relationships with boards and CEOs globally to actually source and execute those massive deals we just talked about.
But crucially, they aren't just kicking back and resting on their laurels. They're aggressively expanding this talent pool. Since just their last earnings call, they've added 4 new SMDs across industrials, private capital, and healthcare. And even better for their future outlook, they've already locked in commitments from 7 more SMDs joining in key areas like restructuring, chemicals, and equity capital markets. They are quite literally buying growth by hiring the best in the business.
And as Chairman and CEO John S. Weinberg explicitly puts it, they are continuing to invest in the business and remain hyper-focused on creating long-term value. This aggressive strategy of acquiring top-tier talent is directly woven into their broader corporate playbook. They're totally fine absorbing some short-term compensation costs if it means securing the heavy hitters who will drive revenue for years down the line.
Finally, Section 5, Capital Returns and Value for Shareholders.
First up, shareholders got rewarded directly with a declared quarterly dividend of 89 cents per share. And look, a consistent, robust dividend like that is a direct reflection of a firm's absolute confidence in its cash flow and balance sheet, which, by the way, remains incredibly strong with $1.3 billion in cash and equivalents. But honestly, even more impressive than the dividend is this. Evercore returned a massive $822.9 million to shareholders in just the first 6 months of 2026. That's the combined power of those dividends and their super aggressive share repurchase program.
Let's break down exactly how they executed those returns. Year to date, they repurchased 1 million shares from employees for net settlement of stock-based comp, and then they scooped up another 1.3 million shares on the open market. That is 2.3 million shares taken completely off the table at an average price of $324.60. Buying back stock at this kind of volume shrinks the overall share count, which in turn beautifully concentrates the ownership and earnings power for everyone left holding the stock.
So, we've just broken down the anatomy of a truly historic quarter for Evercore. The data clearly shows a firm absolutely executing on all fronts, from complex advisory to unprecedented growth and underwriting. But the real kicker here is that they're taking those record revenues and plowing them right back into elite human capital, which leaves us with a pretty compelling question. With a record-breaking $2.4 billion first half already in the books and a massive incoming wave of top-tier talent ready to hit the ground running, what new heights is Evercore going to reach in the remainder of 2026? Thanks for joining me on this explainer, and keep your eyes on the markets.